Welcome everyone. So a lot of things to unpack in this video. I'm not going to focus on NVIDIA's Q2 fiscal 26 earnings results because you already know them. You already know the absolute ridiculous, 56% increase in revenue. I mean, the company has a market cap of 4 trillion, 4.2, I believe, and it's growing revenue at a rate of 56% per quarter. Yeah, per quarter. I mean, that's insane. So I'm not going to go through that. You already know that shit. I'm going to go through NVIDIA's exposure in China, and particularly some of the things that I found interesting as DeepSeek is eyeing at Huawei's chips for inference and training I wouldn't say the R2 model. It's a smaller version of the R2 model because still NVIDIA chips are the go-to for DeepSeek when it comes to training. However, it seems that Huawei chips are not that good. They have a lot of issues with overheating and actually breaking down in the middle of the training. So Alibaba, a new player, and you probably know about them, just look at the chart there. Alibaba was up Friday by 13%. Ouch. Was that on Friday actually, 29th? Yeah, it was on Friday. And of course, NVIDIA was down as it's just a normal profit-taking session. There was no major news. Yeah, the company missed the data center revenue by how much was that? 200 million, which is nothing, compared to the figures that it posted. So if you look at the earnings release, it was like 41.1 billion in a quarter in the data center revenue, up 56%, which is absolutely insane to have this growth at that figure. If you have 4 million, having a 56% year-over-year growth makes sense because it's a small amount, so you can grow it relatively easily. But when you're at 41 billion, I mean, come on, increasing at a 56% is just insane. So, yeah, the consensus, I think they were targeting 41.3 billion, which is a lot. But 200 million up and down, it's nothing. So of course the market is as always taking this opportunity to to take some profits. And I'm quite bullish on the chart, to be honest. I mean, you probably seen this. Just have a look. I really love when I see an upward trend and then a consolidation, because that means that the market is loading for the next run, because it's absolutely unsustainable, and you probably can imagine why, if the price just goes up. That's not going to happen. The price is going to go up and then it's going to consolidate and then it goes to the next run. And I believe that the next run is going to happen once the company unlocks revenue in China. So according to them, during the earnings release, they management said that the company could add 2 to 5 billion in H20 revenue in the third quarter. However, and this is key, this is not projected into their guidance. In other words, this amount is significant. It's a big upside, and that's not in the guidance. And I believe there is a very big chance that part of that 2 to 5 billion range is going to be recognized in this third fiscal quarter. So overall, I am quite bullish on the company, and I believe that once the company clears out all the uncertainties with the US government in regards to that 15% tax. It's not a tax, it's a deal. It's a fucking tax, let's be honest. It's industrial policy. It sucks as a shareholder. It sucks to have to share 15% of your revenue with your high school bully. You know what I mean? But that's how business works. So you have to abide by the rules. And 85% of how much was that in? Let's go to have a look at the revenue in China in 2024, actually, because that's when it wasn't limited by the restrictions. Well, it was limited, but not to this extent. So if I have a look there, annual, let me do a Control F, China. All right, we're talking about 10 billion. 10.3 billion revenue in China in the year Sorry, that was, of course, January 24, January 25. Crazy, 17.1 billion. How much is that? Just for curiosity, how much is the growth in China? Let me do a control F as well. The growth is 66%. Are you fucking kidding me? 66% between the year ending in January 24 and the year ending in January 25. That's insane. And yeah, there is, I prefer to have 85% of this amount in exchange for that 15% with the US government. So that's fine. That's fine. What is not fine is the news DeepSeek. So the company is said to be considering some of Huawei's processors to train smaller artificial intelligence models. Why? So R2 was delayed. Yeah, there was a lot of expectation regarding R2 because, well, R1 is already competing almost head-to-head with OpenAI's O3 model. So R2 was, a good bet that the company had to compete with GPT-5. However, the CEO was not really happy with the training, and that's why it was delayed. And they're not really happy with the model. Of course, the reason is the lack of H20 chips to train the model. Now, what the company is doing now is looking for Huawei's processors. Let's see what's going on. So eventually, they chose the Ascend processor to train a smaller version of the R2 model. And this is key. It's a smaller version. It's not the full R2 model. So we have the delay, and the R2 model, which is a big one, it seems that it's going to be delayed at least for a few months after the company strikes. It's not that strikes a deal, because the deal has been already made with the US government. It's until they actually sign everything, and that 15% is formalized. The problem with Huawei so far is that their chips suck for training, and according to Wall Street Journal, they have overheating and breaking down issues in the middle of the training run, which sucks, because if you have to suddenly stop training because your chips have broken down, you have to restart almost from the scratch, unless you have certain guardrails where you save the weights in your model. All right, next, Alibaba. So Alibaba is joining the party, and they see an opportunity here. The key with Alibaba is that their chips are compatible with NVIDIA. Huawei chips aren't, and this is key. Given that Huawei chips aren't compatible, if your data center is 80% NVIDIA H20s, what the heck are you going to do with the remaining capacity that you have? Are you going to use Huawei's chips, which are not compatible with NVIDIA, so they're not compatible with CUDA? Or are you going to use Alibaba's chips, which are compatible? And, I think the case is really simple. Also, one of the reasons why, Alibaba has developed the chip is because China, they don't have chips to train, and Alibaba sees an opportunity here. This was one of the largest customers of NVIDIA traditionally in the Chinese market. And now the company, it's seeing an opportunity to capitalize on that regulatory issue that NVIDIA still has. And let's be clear, it's not that NVIDIA doesn't have the license. They do have the license. But because the 15% revenue share with the US government is not clear, that's the issue. It's not clear, therefore we're not shipping shit. So that's the stance. Now, after NVIDIA received the license, and it was already rumored in mid-July that they're going to get the license because it was part of a deal with the US government, we have the Chinese government. It's not the Chinese government, it's actually one of the entities. If I have a look here, there you go, is the Cyberspace Administration of China, whatever that is. The company is saying that local AI companies shouldn't use NVIDIA's H20 chips because whichever reason. The reason doesn't matter, because they're going to make up whatever reason they find suitable with their intentions. And of course, they want to slow slow down NVIDIA in China. And it makes quite a lot of sense for this entity to advise, quote unquote, because it's not an advice. You either listen to them or you disappear from the map. So that's why, that advice is more like you either do it or there is no other option. So traditionally, companies like Alibaba were quite hesitant to use Huawei's chips. The main reason is because Huawei is a direct competitor in the AI segment, in the AI computing segment. And, if you imagine Google and Meta, imagine that they were semiconductor companies and they still had their ad business. Of course, they wouldn't be keen on buying chips from each other because you're helping your competitor in the ad segment, yeah, and you're buying from chips from them. And that doesn't make sense for a direct competitor. So that's why the government is, pushing these companies to buy these crazy chips from Huawei, which break down halfway through the training sessions and they overheat and they're not efficient. But, I guess it's a fair point for the Chinese government. Now, in Shanghai, there is another company, MetaX, very interesting. I'm going to show you the website now, that has unveiled a new chip that, according to them, it could serve as a replacement for the H20s. So the chip is said to have larger memory, to have more power for some AI tasks, particularly in training, but is using more electricity. Now, what is interesting is that MetaX recently said, and recently is like this week, starting on, I don't even know, when did this week start anyways? August 25th. They said that they're going to start a ramp in their chip. Now, if you go to their website, this is such a classic Chinese website. Check this out. This is the products site, right? Just let's go to there. Yeah, this is the MetaX N series. Let's scroll down. All right. Yo, where are the features? Do you see what I mean? Where this? I click everywhere. Believe it or not, I'm clicking everywhere, and I don't see anything popping up. There is no information. It's just the usual bullshit, superficial, generic introduction to this chip, and there is no information. So, of course, typical Chinese website. It's actually, if you go to the homepage, yeah, you can see it. It gives you the vibes of, 2010 website vibes. Anyways, that's fine. Semiconductor companies, they don't need to have a good website. They need to have a good product. So, anyways, going back to the Alibaba chip, the new chip will be used mostly for inferencing tasks, and as I said, those are the important ones. And H20s are going to be used for training so far. Although, to be honest, I wouldn't be surprised if Alibaba is looking at the training market because, I think they have a massive opportunity given that Huawei's chips suck in that segment. Now, in regards to the manufacturing of these chips, you can't, when I say you, I mean Alibaba, can't use Taiwan Semiconductors because the US blocked Taiwan Semiconductors from manufacturing AI chips from China that use, leading edge technology. Again, it's another excuse that the US government is using to curb down the AI progress in China. Whenever you see a justification from a government as to why they do certain things, that really doesn't matter. The justification is simply because it's on their best, interest to do that, and that's it. It's the same as the fentanyl tax, that tariff. Well, it's the same as tax that Trump has on China, Canada, and Mexico. I mean, it's just bullshit, and it's a random criteria that he used as a justification to serve his purpose, which is taxing the major partners. All right, moving on. As I said, the weakness is in training AI models, all right? And Alibaba was designed for inferencing, not training. And well, finally, the homegrown chips in China. As I said, they have issues with overheating and with breaking up in the middle of the runs. And so far, if you look at Alibaba's growth in the AI segment, it's not bad. 26% in the past quarter, which was last Friday, and AI-related tasks doubling in revenue for 8 consecutive quarters. That's good. That's bullish. It's bullish. That's why stock is up in the double digits in one day. So, as I said, mid-July we had NVIDIA resuming the AI chips to China, which was part of ARIRI talk. I'm not going to go into details. It's not really important, the ARIRI deal in the US. And the main reason is because MP Materials has said to stop exporting ore to China for processing. So, what's the point of the ARIRI talks anyways if MP Material is going to now process its own ore at its site? I believe it was in Texas. So, yeah, not a big deal in my opinion, even though a lot of people are hyping up this the ARIRIs because they're so important for magnets that end up in electric vehicles and pretty much anything. Like this mic, it has a magnet. When I talk, that's how it creates, the sound waves, and that goes into ones and zeros. Anyways, what do I even know about NVIDIA? Ordering 300,000 H20 chips from Taiwan Semiconductors just a few weeks after that announcement. And this is when, of course, the US Commerce Department stated to issue the license. Okay, so today NVIDIA has the license to export. Of course, part of that 15% deal. However, this organization, the CAC, the Cyberspace Administration of China, has told Baidu, ByteDance, and Tencent to stop with the stop using NVIDIA's chips. It's crazy, but I think it probably works. Now, as for the share price, and as a conclusion for the video, the growth is ridiculous to say the least. 56% in the top line and 56% in the most important segment, which is data center revenue. And Blackwell data center revenue grew 17% sequentially, right? Sequentially. This is not year over year. So growth is explosive to say the least. And if you look at the charts, I believe that shares are going to consolidate until the US strikes a deal. Until the US, it's not a strikes a deal, but makes the deal with NVIDIA official. And the company has clarity as to what 15% of sales means, and yeah, I think it's gonna rally after that. So for the next few weeks, maybe months, we're gonna see this going sideways, and then eventually it's gonna take off. So that's my view on NVIDIA. If you liked, I would really appreciate if you hit the like button. If you hated the video, hit the dislike button. I need engagement. I barely have 10 subscribers, so come on, let's go. Thank you so much. I'll see you in the next one.